Welcome back to the Dividend Diplomats YouTube channel. You've got Big Bert the Hurt Locker himself over there, and you've got Lanny, and we are the Dividend Diplomats. And today we're talking to you about two high-yielding dividend growth stocks based on all the comments and feedback we've been seeing, and we're bringing it right to you.
You know the drill. Before we get going, smash that subscribe button. Give this video a thumbs up. Everyone, we are cruising on our way to 10,000 subscribers. And this time, we mean it. We're going to do a full-blown wrestling video for you. So get ready. Help us get to 10,000. Maybe we'll bust out the Ric Flair robes. Who knows what's going to come to your way when we cross 10,000.
Exactly. You made a little bit of what you gonna do, brother, when the Dividend Diplomats run wild on you.
Yeah, I love it. I'm not feeling the impersonations right now, so I'll spare you all from that, but maybe in a future video I'll be bust out my Macho Man too.
So as we just said, we wanted to talk to you about two high-yielding dividend growth stocks. People have been asking a question too. Hey, can you, instead of doing just high-yield investment on AT&T and Verizon Wireless or Verizon Communication, to mix in a few other ones?
Yeah.
So we reached into the bag. We found two right now for this video, two dividend stocks that have at least had not one, not two, not three, not four, but at least 10 plus years of dividend increases that both yield close to or over 5%.
But we don't just talk about the yield. I mean, quite frankly, if we wanted to just give you a video about high yielding stocks, we could give you hundreds of dividend stocks out there. It's not just about that. It's about finding high yielding stocks that have safe dividends. And then on top of that, have a history of increasing their dividends and, oh, wait, are undervalued too, because we buy undervalued dividend growth stocks. We're not just going to tell you to go buy some expensive ass stock off the shelf. We want to help you find value for your portfolio.
That bonus metric is always the dividend yield. So we wanted to put two dividend stocks that we found through the Dividend Diplomat stock screener, which focuses on three key dividend stock metrics. One being the price to earnings ratio being below the S&P 500, as well as being strong amongst the competitors, maybe within the industry. Two, the dividend payout ratio, preferably in that 40 to 60% range, what we like to call the perfect payout ratio or the sweet spot. Third is that dividend growth. We want to see consistent increases to the dividend, as well as not just that growth rate, but also having that longevity of growing a dividend.
So there it is. And then as we talk about that bonus metric, the dividend yield, if they pass all the things. So we're going to run these two high yielding dividend growth stocks that are undervalued through our stock screener and talk to you about them. But wait, we actually haven't told you what these two companies are, have we, Lanny?
That we haven't, Bert.
So dividend stock number one that we're going to talk about, Philip Morris, ticker symbol PM, a heavyweight in the tobacco industry. They focus on the international sector with some of the biggest brands out there. Come on, we all know them.
We all know them. They have Marlboro. They have the big other, smoke-free product with IQOS, IQOS. So really those being the two big staples right now for Philip Morris.
Yeah. So, I mean, they're hot in a lot of people's portfolios. I know we both own shares of Philip Morris. So we're going to be particularly interested in the outcome of this stock screener to see if it's a stock to buy for our portfolio. And Lanny, who's company number two that we're going to be talking about today?
Company number two, we're not even in the same industry here. We're going over to the utility sector. I know in our previous video, we talked about National Grid, ticker symbol NGG, on my dividend stock watch list for April, but we're bringing it back to the US of A here. And we're going to head over right now to the east of Ohio, Pennsylvania-based PPL Corporation, ticker symbol PPL, and they serve over 10 plus million customers through their utility platform.
I love when a ticker is the exact same as the company's name, and PPL, that checks that box for me right there. That's exactly. I don't even need the metrics. I'm buying them for that reason right there.
Buy them on name and ticker symbol alone. If that's your poison.
Yeah, hey, that's how you win some brackets. Some people don't even know that. But all right, so let's jump right in. Philip Morris, at the time we're filming this, 88.06 per share, forward earnings of $5.99. That gives you a PE ratio of 14.7. Stock market's trading above 40x, but it's been consistently between 35 and 40. Very nice discount compared to the broader market.
Yeah, pretty good discount. And then when you compare that with PPL Corporation, again, ticker symbol PPL, at the close of business on April 2nd, they were trading at $28.77 per share. Forward earnings that the analysts are expecting are $2.50. So Philip Morris, as Bert said, had a PE of 14.7. Well, PPL has a price to earnings of only 11.51.
Wow, so they're trading at a discount compared to Philip Morris right there, in a heavy discount compared to the market. Nice.
That's a hell of a deal, Bert.
Yeah, because the deals are so good.
Yeah. So Bert, what about that dividend payout ratio with Philip Morris? This smoking Philip Morris.
Yep, their dividends per year are $4.80. Divide that by the forward earnings of $5.99. It gives you a payout ratio of 80%.
Oh,
Yeah, exactly. That's they are not they are above our range of the 60%. It is worth noting that the tobacco sector traditionally pays a higher percentage of their earnings out in the form of dividends. So there, even though we use 60%, there are some sectors that historically will pay greater than 60%. Tobacco, some utilities, we have oil companies, definitely oil companies right now, as we covered with our Exxon and Chevron video that we released earlier in the week. So is 80% higher than I like? Yes. Is it concerning to me? Fully not entirely, because it's still room to go before it's 100% and they're in a higher paying sector.
where you're like, oh, it's true. It's damn true. Now, PPL in the utility sector, traditionally in a higher dividend payout ratio industry as well. Their payout ratio with the dividend of $1.66, dividing that by the forward earnings of $2.50, actually isn't that an alarming payout ratio, but it's at 66%, so kind of right up there with AT&T, which we've obviously have made plenty of videos about AT&T stock.
Yeah, I mean, for the same reasons of what I just mentioned with Philip Morris, they're in a sector that pays a slightly higher payout ratio. So again, 66% is better than 80%. If I wasn't concerned about Philip Morris at 80, I sure as heck can't be concerned about PPL at 66% when they're in one of those higher paying sectors.
Bert, as dividend investors, we like our income to keep growing year after year. So what does Philip Morris's, dividend history look like, as well as the growth rate? And we'll have to note that Philip Morris and Altria spun off about 12 years ago. So Philip Morris probably doesn't have a chance to have more than 12 years, but what is that streak?
I'm going to put a poll out there. If you think it's 12 years if they've increased their dividend since the spinoff, make sure you hit that like button and then give us that thumbs up below. Because I'll tell you what, if that's what you picked, you are correct, because they have increased their dividend every year since the spinoff. So yeah, I mean, if they haven't been their own individual company since then, can increase it 25 years if you haven't existed 25 years, but it's encouraging to see that they've increased that dividend every year since. And their 5-year average dividend growth rate is 3%. So as you'll see when we talk about the bonus metric, they're a higher yielding stock, so a lower dividend growth rate is expected.
Wow, there you go. Every year that they've been a separate company, increasing the dividend, I can't ask for anything more than that. Somewhat
No,
actually. What's that?
I said, no, you can't.
Yeah, you can ask for a pack of cigarettes with that dividend.
Yeah.
But
But now tell us about PPL, Andy.
so PPL actually has a 19 plus consecutive years of increasing their dividend. Now that is well on their way to become a dividend aristocrat. Now, if you remember, we both love Con Ed, ticker symbol ED, who's been a beloved dividend aristocrat in the electric utility sector. PPL coming right back on their heels at the, they're right there. 5 more years really after this, because this year will mark the 20th year. Very, very solid. And then their 5-year dividend growth rate, again, utilities aren't in a high growth industry. They're not sexy. They're not Tesla. They're not Netflix. It's, electricity and natural gas distribution to households and businesses. So with that, earnings doesn't grow at a high clip. So going with that, the dividend growth usually isn't as strong as well. So their 5-year dividend growth rate on average is about 2%.
Yeah, I mean, personally, I think that's very sexy from a dividend investor's perspective. That's exactly what we like. We like these companies that have increased their dividend for 19 consecutive years and have shown their ability to continue growing. You're right. The majority of investors would just laugh at that and say that's nothing. But us and so much of the dividend investor community love it. That's what we want to see in a company that we may potentially own one day.
I'm kind of looking at PPL and Philip Morris before we get into the yield. They're kind of like fixed income stock. You're getting a high yield with a, modest, dividend growth rate, definitely pacing with, if not maybe slightly above inflation so far.
It's tracking. And exactly, Lanny. So let's jump into that bonus metric right there, the dividend yield. Looking at Philip Morris's dividend yield with that $4.80 per year dividend, divide that by the current stock price, that gives you a dividend yield of 5.45%. And what's PPL's dividend yield?
5.45% for Philip, huh? So PPL comes in with that $1.66 dividend over that share price of 28.77. Oh, and they're coming out with a nice 5.77% dividend yield. So both companies trade at well over 10 times what you're currently getting on your high yield savings account at Ally, Capital One, or Goldman Sachs Marcus.
Exactly. And that's not very much. I thought you were going to say they were both trading over 5%, which is why I held up the 5. But you could also say they're trading more than the 0.5% of those terrible, terrible high yield savings accounts. So, in summary, let's just give you a quick overview of the metrics. Philip Morris's PE ratio is 14.7, payout ratio 80%. They've increased their dividend for 12 years with a 5-year growth rate of 3%, and their current dividend yield is 5.45%.
And PPL has a PE ratio of only 11.51, a dividend payout ratio of a modest 66%, right? Just above that ceiling that we usually like to see of 60%. The dividend growth rate on average is around 2% with 19 plus years of increasing their dividend. And they have that solid above Philip Morris's dividend yield of 5.77%.
So here's the major question is what are we going to be doing now that we know that there are two great undervalued stocks that have a 5% plus dividend yield? I know for certain I will be watching at least PPL and maybe Philip Morris. I'm always on the hunt for great utility companies because I love that stability and I love the slow earning.
I love that stock.
But it would be a nice complement to some of my other utility positions because my utility is not as large as some of my oil stocks, some of my communications, and even my Philip Morris position that I have. Although it would be nice to also add and continue building Philip Morris as well. What about you, Lanny?
Well, it's interesting because, I had National Grid on my watch list. I'm really liking PPL here. I mean, solid metrics. So I'm going to add them to my mid-month watch list. Start looking at that stock price. Again, not a bad company here. If you don't have any utility company, and you're looking for definitely a high yielder with room that will still continue to grow their dividend. Definitely look at PPL. I'm recommending them to be looked at by all the viewers out there as a nice high yielding undervalued dividend growth stock. You heard it here.
There we have it. Both of us will be watching PPL over the coming month and we may be buying it. So stay tuned to future videos as well. And if you haven't done so already, subscribe to our channel and give us a thumbs up. And also let us know what you think about PPL and Philip Morris, or if there are any other undervalued dividend stocks over 5% that you're going to be watching over these two companies.
Let us know which one of these two you even own already. If there are other dividend stocks you'd like us to take a look at, let us know in the comments. Again, if you haven't already, give us a thumbs up if you like the video. Subscribe to our channel so you don't miss a beat from the DD over here. This is Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.